Hey there, my name is Ace, and today we're going to be talking about what's going on in this market, how the road to a Milli challenge is doing, and how you can profit off of these weird swings. So stay tuned. Okay, so first things first, let's take a look at this overall market, which has been brutal. There are a few reasons for this. You can read reports and they'll tell you all these other weird things, you know, it could be anything from chip shortages to inflation to blah. But the fact of the matter is this: everyone got over leveraged last year, going from all the way from July all the way till March of this year even. You know, you took out loans, you decided to put more money into the market, everybody did it. Now, if you had the ability. Now, the thing is with that, I think people are starting to see that this is a bad thing. You can't over leverage yourself. If the market even takes a 10% dip, you're going to get into big trouble. So not only did it happen to retail investors like us, it happened to the big institutions as well, right? They over leveraged themselves. You're starting to see some mass bankruptcies like with the Archegos case. And what's resulting in that is just probably some warning signs from lenders saying don't over leverage yourself, give us our money back, or something like this, right? And companies are just wising up, especially with ongoing China-US tensions, and now with the whole Russian crisis in Ukraine, and that actually is going to lead probably to another oil crisis. So you have all of these things coming into play, and of course the overlying factor is indeed inflation, right? So that's another reason. Basically, this is all leading to everyone wants to reduce their risk. You're starting to see people say, I don't want to have so much margin because it's running a high risk for myself, right? You're starting to see everyone pull out of the market. Now, this isn't, I shouldn't say it like that. This is not everybody just selling off. That's not the case, but everyone is kind of reducing their position a little bit and taking less risks or going into value plays, right? So that's why you're seeing growth stocks like tech in general just sell off. And it's a normal part of the process. Like tech was insane. Actually, I did mention even to the subs in Discord back on April 6th. And even I mentioned before that, but this was the most recent one. I said, you know, the market is at pretty wild highs. I can't even see anything to buy, basically. And I was looking around everywhere, and there was not a good deal for anything. Usually when that happens, if you're watching these tickers pretty frequently and you're starting to see the market at these nosebleed highs, it usually means that a correction is coming. Especially when you actually have the money and you still don't want to put it in anything because it's so high. So I did mention that, and I said, you know what, for those people that can take your gains, put it into things like real estate, which is also booming. But the thing is, you want to lock these profits and put it into less risky investments, right? Especially with real estate, you have a tangible asset that will no doubt appreciate in the future, right? Or at least the land will appreciate, and all of that. But you're definitely going to see an increase in the value of a home, which is the same thing as the market in the long run, but the market was at these crazy highs. So that's just something to note, but I'm very confident in the market. I still have pretty much all my money in the market, right? Like other than a few assets. So that is not to say that I'm losing hope in the market here. I'm just saying there are very good reasons for what's happening out there right now. Do not panic. In the long run, the market will win. Everyone will put their money back in the market. You're going to see a rotation, like people will refinance their homes and then put it back into the market, for example. But now we're seeing this happen over a longer period of time. You're starting to see most of these YouTubers say, including myself, say around September or August, you're going to start seeing things like this. And I believe this too, around August all the way till March, people were reinvesting into homes. And then, you know, after waiting a year and after tax implications and all that, you can refinance your home and then put it back into the market, for example, or put it into another investment home. It really depends on what is the better price, for example. So, I mean, if you come back after a year and you're seeing that the market is at lows for which we're heading towards with all of these factors that I mentioned, then the market will be buoyed again, right? So now we're not seeing these, weekly or monthly timelines. We're seeing like quarterly and yearly timelines. So this is actually quite normal for the market for those that are new to the game. So that's I just wanted to start off with that, just the market status. It's a don't panic kind of thing. It is a long game, and the market has really always been a long game. These short plays, while it was fun, that's not really the way that the market works in the long run, and patience always wins. Okay, switching gears, looking at the road to Milli profile. So we're about 22k after the losses sustained by IPOF warrants and Bridgetown units, which I still own. They're almost at their pretty much the lows, which I said is a possibility that they could go down to, but of course there is a floor, luckily, with SPACs. And I think as soon as that they find these mergers, then they're going to be buoyed up. And it might not be the double up that we were expecting, but well, at least it'll give us something to look forward to. Now, other than that, we do have cash that we are utilizing in order to make things like cash secured puts. Now, I did actually buy some Airbnb stock, for which it is unfortunately down. But I do believe in Airbnb over the long run, especially over this next quarter, where people will start traveling again now that the vaccinations are, hopefully people are getting vaccinated, and then they will go into their Airbnbs and travel more and more, which actually is something that I want to do myself once things are safe and settled down, right? So personally, I would reflect my own thoughts onto the market because I think everyone has like some kind of cabin fever and everything like that. So Airbnb is going to be a great investment going into the future, and actually I do think it's undervalued right now, actually. So we do have the Airbnb shares, and we do have cash secured puts, and they were up for a little while, but then came down with this last recent market correction, as you might say. So we're down to about 22k. It's not reflected here, but it is over here. We're going to keep it like this as these cash secured puts play out. I believe this is going to be our ending balance by either mid-May or the start of May, is my hope. And actually, if we look at the play tracker, you can see these cash secured puts that I'm talking about. Previously, the Etsy cash secured puts, it was such a golden play. It was up 50%. And that's normally around the time that you should get out. I discussed this in the last video as well. But we didn't because I looked around for all of the other options in the plays that I could have possibly wanted, and none of them were actually selling for as good a price as Etsy even after the 50%. So these were just dynamite options. And actually, you can see even after the market correction, they are up 20%. I mean, it's still good. Obviously, I would have preferred the 40% or 50% that I had up here. But I do honestly believe that it's going to play out to 100%, right? So I'm keeping them. And I did mention that the Airbnb, because it's down, now it's down 33%, which just means that I have to wait it out till May 21st. And if it's still down, then I'll just roll it over to June. So that's going to reduce our potential gains going forward, but I do not think it's going to be a loss, as this is reflecting. So that's where we are. That's where the plays are at. For those that are still looking into the market, just look for great plays. I would say look into Tesla, Neo, Airbnb. These are my favorites, and these are the buy-in prices. Set your buy-in prices, get in if you can, scale in, and then set your stop losses, because putting in proper stop losses will protect you from the downside. Alternatively, you can do what I've been doing, which is cash secured puts on the stocks that you trust in most at the target price that you would want to buy at if someone said, hey, would you buy 100 shares at this particular price? That's what I've been doing. That's what I did with Airbnb. At the time, I did overpay for it at 185, but at the same time, I was actually thinking about buying shares at that price, right? So it really depends on how you feel. Like, I still don't regret this play because I would have bought them at 185, for example. So you just have to have that mentality. And otherwise, you can do advanced plays like spreads. You can do credit spreads or debit spreads if you're feeling extra spicy. Okay, so that's it for me today, Stock Bros. So, I mean, overall, the message is just budget appropriately so that you're having your monthly investment injection, as well as protect yourself with protective puts and stop losses. and keep some dry powder on this side in case your stocks go to a target price that you actually like. So that's all I wanted to say. That's what I'm doing. That's my execution strategy. And till next time, we'll continue to make those gains.